Let's beat inflation. Let's keep our buying power and let's grow our wealth. If you're subscribed to my channel, you know that every Friday I do the same episode that I've been doing since February of 2024. And we go over a basket of goods that we've put together to diversify and beat inflation. But first, I always like to have an article or a clip or something. Watch this with the Rich Dad, Poor Dad author.
The S&P is up 24%, gold's up 32%, and silver's up 43% because India is buying silver like crazy right now. So there's the rush is out of the dollar and into alternative assets, should we say. Well, the biggest issue is America is now the biggest debtor nation in history. And our debt, our interest payments on our debt is $1 trillion. And if you paid $1 a second, it would take you 32,688 years to pay off $1 trillion. And we're not slowing down our debt. That's why people are rushing to what I consider real money. And I started years ago. I have about 70 Bitcoin, and I like it. I'm happy with it. But I also have gold and silver, and I have real estate. So I have other sources of income. So as you know, Neil, the word is diversify. Don't put it all in one basket.
Okay. So as you can see, it's not a new idea to diversify. Financial advisors have been doing it for a very long time. It's not a new idea to be in different alternative investments. But what I always like to point out is that the rich, when you look at various charts and statistics, have a lot of assets as opposed to holding dollars. To give you an idea, you might log in to your Fidelity account and you might see a dollar value, but you actually don't have dollars if you've bought stock. You actually have stock that you can convert to dollars. The idea being that the dollar, because of inflation, loses value over time, a lot of value. We showed last week that even the euro lost a significant amount of value just in like 20 or 30 years. But if you had things like assets, and you know this, because look, the last couple of years, cars went up, homes went up. Those are assets. Not so much cars. They typically go down in value, but real estate, stocks, gold, silver. So let's get into it. First, I'm going to start with just inflation. You can see here September, 2.4% inflation. So that means that your dollar is losing value. You're going to buy less with it. So you want to earn a return higher, way higher, hopefully, than inflation. But I'd like to point out that if you go back just 2 years ago, inflation was through the roof. And this is when housing prices became unbelievably expensive, and cars and all other things, eggs, you name it. We know this, but this has not gone away. In order for this gain to have gone away, these would have to be down to zero or lower. So we need to get rid of this. If that doesn't happen, well, prices will stay where they are and continue to grow nominally. Okay. So first we look at what if we just held dollars in an account, like a bank? Well, we'll just look at these. Savings 0.45, it's about the same. And then we look at a 3-month CD. What if you go to the bank? You put your money, you lock it up for 3 months, 1.54%. And look, the treasury, this is from a bank. This is from the government, generally speaking, 4.73%. That's come down. It was a little over 5. So you're not beating inflation and you're barely beating inflation. Well, what's the point of that? So if you just hold on to those dollars and put them in those types of accounts, not much is going to happen. So the first thing we look at when we talk about diversification, we've got the gold price, which since February is up significantly, as you can see on the chart here, because we track it. Silver up to 34. That's almost a 50% gain since earlier this year. Bitcoin, 67,000. That's up. Ethereum, these are cryptos. Some people believe in them, some people don't, but they're gaining more, acceptance in the community. Big banks are creating ETFs and those sort of things. By the way, since I mentioned ETFs, let's take a look. I've got a link down below. I put together this article here where you can see Bitcoin spot ETFs. I'll explain in a second. Ethereum, gold, silver. Now, these are the names. So if you want to go out and you want to go to, let's say, your Fidelity account, you want to buy this particular Bitcoin ETF, spot ETF, you just buy shares of that particular one. I always say do your own research to pick ones that you like. But the point here is, and I should say, these things don't always go up. We'll talk about that at the end. But in order to, you don't have to go buy physical gold, buy physical silver, go figure out how to get a wallet and buy Bitcoin or Ethereum. You can essentially just buy shares of one of these ETFs and they buy the equivalent amount of that particular asset. Okay. Next, stocks. You can buy index funds. So here's the Dow Jones, which is 30 stocks. Year to date, it's gone up significantly, over 12%. It's still up since February. The S&P 500. I believe I heard today, it was O'Leary from Shark Tank say that I think the stats are 80% of financial advisors can't beat the performance of the S&P 500. And there's been books written about it that say, hey, just buy the S&P 500 index fund, and over time, things just continue to rise. And usually you can see it's up since the beginning of the year. You can see it on our chart because we're tracking it. You don't have to do anything. You just buy a share of it and they buy 500 different stocks. So you don't have to buy 500 different stocks. It's kind of one of those set it and forget it. This is year to date. Let's just take a look at a 5-year. It's up 93% in the past 5 years. That's significant. Your dollar went down in value, but if you had bought this, it would have gone up. And then when you need it, you convert it. Let's talk about that. As I always say, you need to have an emergency fund. That's cash. But if you have money that you can start saving and put into different assets, the caveat is you have to be careful because you don't want to have to sell the asset for an emergency when the asset's down in value. Because these things, look at this chart, you've got it down, you've got up, you got down, you got up, you get down, you got up, it goes up and down. Now, over time, if you just draw a straight line and average it out, you would just go up and to the right. But there are times when things are down, and sometimes everything's down. Well, you don't want to have to sell assets when they're down or be forced to. That's why you have an emergency fund with cash in it. Okay, 2 things, and then we'll talk about assets in general. We always look at the 2-year treasury. It's a little over 4%. The 10-year treasury, 4.22. The 10-year is paying more than the 2-year. That makes sense. You lock up your money for a longer period of time, you should get a higher percentage rate. That wasn't always the case. This shows whether or not there's been an inversion. Okay, so you want to be above the black line. If this is above the black line, it means that the 10-year, the longer term, is paying a higher percentage rate. That's what you want to see. But when it's below, that means something's going on and the market is signaling a problem because the 2-year is paying more. Big deal. What do we care? Well, if we go back over time, these gray areas are when the U.S. had bad financial times, like back in 2008, that crisis. Okay, if you notice, right before each bad gray time, there was an inversion. Things were below the black line. Then when it came out, some time passed, recession. Low, see here, everything was fine. And then it went below, came out, recession. Everything was fine, went below, came out, recession. Everything was fine, went below, came out, recession. Everything was fine. We've been below for a very long time, and we just came out. Recently, we just came out, and that was around August or September. Doesn't mean that we're going into recession, but maybe we could have some bad economic times. I suggest, and everything on my channel is not financial advice, it's my personal opinion. I suggest you get out of debt, particularly high credit card rate debt, like 24%, that sort of thing. Try to eliminate that because that's just crushing you. I've got many videos, just take a look at the playlists on the channel that go into various ways of getting out of all sorts of debt. Very creative ways, and I've got calculators that go along with those that do the math for you. The second thing is try, if you do, make sure you have an emergency fund and you can make it last. I've got videos showing how to make it last longer and how to create one and know how much to save. I'll put links to those below. And then also saving through the use of assets and diversifying. So we talked about gold, silver, crypto, stocks. Of course, there's real estate. I don't discuss that at the moment. I think real estate's in a bubble. I think it's too high. I'm staying away from it. But all these other things, what they call dollar cost average in, meaning I buy some every month. So I save some dollars and then I also diversify into other things, hoping that they will go up. And by the way, they don't always go up. If we do go into recession, the stock market could come tumbling down. There's been quite a few people recently talking about how they've been moving money out of stocks and just holding on to maybe cash or putting it into things like gold or silver. I'm not suggesting what to do. I'm just saying be careful because things go up and down. Don't lock up money that you think you might need in the next year or so because we don't know what's going to happen to the economy. Hope this was helpful. I do this every Friday and I put out many videos. Please do subscribe so you can see the ones that come out regarding various things like how to get out of debt, how to pay off your car loans faster, your home loans faster, your credit cards faster, whatever it may be. Again, hope this is helpful. Have a great weekend.